Mickey, last Friday ended on a surprising note with Amazon announcing the acquisition of Whole Foods for $13.4 billion, and competing grocery stores and even Walmart and Target took a pretty big hit in their stock. What are you telling investors right now?
Well, it was very interesting, and the deal did, like you said, affected all of retail stocks except for Whole Foods, and you really can't make any judgment off one day. Who knows what's going to happen with this deal? I mean, there's even talk that there may be another bidder coming in because Whole Foods was trading higher than Amazon's offer throughout the day, which is leading people to believe that someone else is going to bid for Whole Foods. So in theory, Amazon may not even get the company. So there's a lot of what ifs right now. And you just, as an investor, you cannot look at one day's worth of news and make a rash decision. So it's, again, we talk about, seeing the forest through the trees. Today is definitely the trees. And it's very interesting, how this affects Amazon because it really is outside of their core business strategy. But, CEO Jeff Bezos is a very smart man. So it'll be interesting as time goes on to see if it works, it may not work. So to say it's the end of all retail stocks and grocery store stocks is very far-fetched. So, as an investor, if you see a good company like a Costco really getting hit, it could be a good time to buy it. So, you can't get too caught up in the day's excitement.
I guess time will tell, but turning now to the Fed's announcement this week, we had the quarter-point raise as expected, but then, as you pointed out to me offline, that it looks like they've announced that there's only going to be one more this year. So how, again, do you adjust for that, or do you?
Well, that's a good thing because now we have some clarity on the situation that we know that, and they had said before they were looking at 3 for the year, but a couple Fed governors have said, hey, we could have more than 3. So, this third one that they're planning on will be good. Now we know where we stand. Again, the market does not really seem to care. The bigger issue we've seen lately has been the tech sell-off, which has been hitting the NASDAQ stocks, a lot of what they call FANG stocks, the Facebook, Apple, Google, or Alphabet, we call it, Netflix. Those stocks have been getting hit, and it's been causing a little volatility in the market. Now, could that be a more symptom of we're in June, we get the June swoon, or is it a rotation out? There's just so many things going on now, and this market has become more of what we call a trader or computerized trading market, especially during the summer. That's really hard to know what's happening or why it's happening. So as an investor, you kind of just have to sit back and look at a broader picture. So this sell-off is it something to be worried about? Not really. Tech has been so strong that they're giving back money that, it could be for a lot of stocks. If you get Facebook that drops 20%, there's going to be a lot of people buying it. So I think that's really more of the issue than the Fed interest rate because, we were expecting 3, and people said 4. So we're kind of now we have clarity in the situation.
Sound advice to keep calm and carry on. For those who need a little bit more advice from you, Mickey, I know you're always able and willing to help out. How do people get a hold of you?
They can always email me directly, Mickey, Mickey, at Envestim, ENVESTIM.com. Follow us on Facebook, our Envestim page, and follow us on Twitter at Envestim1.